Welcome to FXStreet. If you like what we're talking about, you like the content we're producing, you'd like to be updated to it on a regular basis, head on over to YouTube, hit that subscribe button on our channel, and you can follow me individually on Twitter at JustAnalysisOne. Taking a look here at MATIC. Man, this thing has been all over the place, but the general trend has certainly been up. So there's this inverse head and shoulders pattern that's not inverse, regular head and shoulders pattern that's drawn out with the red lines there. I'm actually just going to hide that for right now. But something that's really ugly is, first off, going back to the beginning of the month, you had 2 days in a row where two really bearish events happened. The first close below the rising wedge happened on the 7th, and then on the 8th, it dropped below the cloud with a close below the Ichimoku cloud for the first time since mid-November. Then fast forward, we moved up, clear rejection up against the Kijun-sen, dropped down below the wedge again, and then we had one of the worst things that could happen on an instrument that's been trending higher like this. It dropped below the cloud and completed what is known as an ideal bearish Ichimoku breakout. But then you saw like the extremes in the oscillators here. You have the RSI still in bull market territory, and it bounced off of the last oversold level at 30. There's and then you have the optics band sitting here at these extremes. So there's a combination of bullish, bearish events, bullish in the oscillators, bearish on the price action chart. But now we've returned inside the cloud, and this is going to likely turn into a test of the break of the rising wedge. Now, if MATIC can't break above essentially 230, then that could trigger a pretty steep drop lower. And there's a good chunk of resistance up here now. You've got the trend line itself at 230, and then you have the Tenkan-sen and the top of the cloud, Senko-span A, at 224. So there's a good chunk of resistance. And then just above that at 240, 241, you've got the Kijun-sen. So yeah, it's a little hairy if it can continue to drive up there. When you look at it on the weekly chart, I mean, there's just a lot of things, warning. Scale was locked there. A lot of things warning that a top could be in possibly. And certainly this vertical line, this is where the Kumo twist occurs next. Kumo twists can often be a stopping point for trends and corrective moves. So if we continue to push higher here up against this line, that could signal a major drop. So if you're somebody who's really bullish on MATIC, and from an Ichimoku perspective, you probably want prices to trend lower or to trade sideways into the end of January, because if it starts to trend higher, it could trigger a really nasty flash crash. Downside risks here I see are limited to the 160 to 170 zone. As far as upside potential, I mean, above $3, it gets into price discovery mode. So who knows how high it can go from there. But yeah, that's where I see the downside risk limited. And upside potential, if it can crack above 240 and 250, then $3 and 350 is where it's likely to go next. Thank you for watching. Please don't forget to like, comment, and subscribe.